that you and I cannot operate our businesses unless we are healthy. And we will not be able to make enough money and buy from us our goods or services. Thank you very much. Now, before we get into the topic for today, dear listeners, allow me, on behalf of my co-presenters, to apologize very sincerely to you for starting our program rather late today. Nevertheless, we are here now, and we hope that you are not going to miss anything. As I said earlier, today's topic is managing money. Now, you will notice that we have deliberately named our program for today very simply, managing money instead of financial management. This is because we would like to be as simple as possible so that each and every one of us does not does not need to have an excuse that they do not understand the topic because of the various terminologies which our learned friends always use. So we will try and be as simple as possible. You will recall, uh, uh, dear listeners and the followers of this program, that earlier on in our discussions of the training program, we dealt with planning. This is very much tied up to what we are discussing today. Now, when you are starting a business, what do you do first? You first decide what you are going to do in the business in some future which you have already determined. Now, you also appreciate that when you start a business, you don't intend to do it in a short period of time and then it is no more. You intend to keep running that business. And as we said at the beginning, our own lives. So that means the business is intended to be a going concern and without ending. If it ends, it is not because that is what we designed it to do, but because of the circumstances which impede the progress of our business. And this is why you need this knowledge so that to continue with the business. It keeps going on and on. Now, having decided what to do with the business, it would then lead you to identifying what resources you will need to do that business. Okay? The resources may be money, may be tools. It may also involve people, perhaps yourself, and maybe others as well. Okay? Now, these people, this material, and the other things that you are going to use will need to be brought together and made ready for use. Okay? Now, when we said you decide what to do in the business, this is the planning process. And as you put all these things that you are going to use together, money, materials, people, and so on, so that you can utilize them in the business, you are actually organizing. Okay? And if you have not only yourself doing the job, but you have somebody else or other people helping you in doing the various chores of your business activities, effective leadership, they need to know exactly what should be done so that what you intend to do in the business can be employed as effectively as possible. And then you will need to look back and see whether what you planned to do is actually being done to the letter. If there is any difference for any reason, then you do something about it so that you can bring everything in order. Okay? So, as we discussed, managing your money for the business, we intend to understand what they are for. At this point, maybe let me pass it on to our colleagues to be able to explain what we use money for, why money is important in the business.
Thank you so much. Indeed, money, we have been mentioning the word money for some time now since we started the topic. The question is, what is money? How well our business is doing. This is a tool that we use to measure whether our businesses are doing well or not. Therefore, money is the means by which what is done in business is expressed and measured. What do we then understand by managing money? This simply means how well is the money for the business used in that particular business. So this is a simple definition of money and what money is in a business. Okay, we haven't gone to the actual definition of money like it's a medium of exchange. What we are focusing on what this money is in business. So in business here we are looking at the money which is there, which is in fact capital. This is the money that you are using to run your business definition that we have given. So it's a medium or a tool that we use to measure how your business is doing.
Now, having heard that from Mr. Mukesi, let's now go on to talking about the importance of managing
Thank you. Thank you very much. Thank you. Yes, the importance of managing money. Well, money should be well managed. It depends on availability of money in the business. If you have money in the business, getting money to your business, it does not blood in your body. We all need our blood. We need blood in our body. When blood in our body goes low, when it gets low, that person will definitely die. In the same way, when your business does not have enough money, it will not be successful. It will not be sustaining. So money is very, very important. In the same way as we say, without sufficient money, the business cannot operate efficiently. So money, dear listeners, my dear businessmen and women, is very important. And therefore, it should be used and managed properly. Because a business person works in order to make more money. That's why we establish businesses. We want to make money so that this money will develop our businesses. In other words, the entrepreneur aims at making a profit. You aim at making a profit. Money that will make your business continue, that will make your business go on and on. Because without profit, then that business is not doing well. So, dear businessmen and women, we need this money in order for us to continue. So, our money is important because it makes us do our business to the best of our ability. Anything that we may need to do in our business, you need money. When you need tools and other things to use in your business, money will be needed. So it is important that this money we have for our business is managed well. Money should not be carelessly used. Let us manage it to the best of our ability so that our businesses are sustained. You remember when the main facilitator started, we expressed the need to have your businesses continue. And it can only continue when you have money. And this money should be well used so that when you have planned well, money will make the business continue. And you will definitely do well and the people will admire that because you are using the money well, you are managing it properly.
Thank you,
And
Mr. Kaputa, for that explanation. Dear listeners, if you already taken into account what we have said so far, as you plan to do your business, you determine how much money you are going to need for that business to run smoothly. And you need to keep the level of that amount of money. This is what we are going to call, if you want to be technical, working capital. Now, your working capital should not reduce. Otherwise, you are going to provide fewer goods and services. Rather, you should be aiming to do your day-to-day operations of the business. Now, as you manage your money well, we are going to focus our attention on two ways in which you can manage your money effectively. And these two ways are budgeting, or you should work out a budget so that everything that you are going to do in the business is systematically dealt with. Okay? Record keeping. Now, when we say budgeting and record keeping, we don't intend to suggest that you do one or the other, but rather that you should do both. You should do budgeting, also keep records. Now, We will try and get into details as simply as possible by, first of all, dealing with what we mean by budgeting. Mr. Mukesi, you can
Thank you
take
so
that up.
much. Budgeting. What do we mean by budgeting? Budgeting is simply coming up with a financial plan. You have your money that you want to use in business. Then that money now, you have to document, show how you are going to use that money. Okay? In business, mind you, here the budgeting that we are doing, we are not budgeting for our home. We are budgeting for the business. Meaning you are using the monies for the business to come up with the activities that are going to be taking place in that particular business. So, budgeting can be defined as a financial plan which shows how money will be raised and spent. Okay? How are you going to raise money in your business? And how are you going to spend that money in order for that money to raise other money? Okay? So, some key aspects about budgeting are: one, budgeting involves preparing forecasts of business transactions such as sales, purchases, expenses, assets, and liabilities. Okay? So, what does that mean? That means you are making a forecast. You are saying, okay, I have 200 kwacha here. This 200 kwacha, when I plow it into business, it should be able to make this amount of money. Maybe 200 kwacha, it should be able to make 1,000 at the end of the day. So there you have outlined what you are going to do with that 200 kwacha in order to raise more money, in order for that 200 kwacha to grow to 300 kwacha, and from 300 kwacha to 600 until it reaches maybe 1,000. So that's simply budgeting. You're outlining the activities. Here, this money, out of the 200 kwacha, 50 kwacha will buy tomatoes. The other money will buy maybe those plastic papers to wrap the tomatoes. You know. Then the other money is for you as you sit there selling your tomatoes. You need to go to the toilet. You need to do one or two things. So you have to budget there. Write down all those activities and how you are going to spend this money. Right? Then your expectations now. These are your focus. You are saying, after spending this money, I should be able to raise this amount of money. Okay?
So the money which is coming into the business
Yes.
is a result of the sales that you are making.
Yes.
Okay. Now, having said that, I think let's also try and explain to our listeners what we mean by assets and liabilities. Because I think these are big terms which we people who are called laymen do not really understand.
Now, when we are looking at, when we mention assets, we are looking at the tools or things that are there for the business. You are talking of, for example, you need a chair. That chair is your asset. Okay? In that business, it's an asset. You are not going to sell that chair. It comes in as an asset to be used in the market, in the business. Okay?
Make you comfortable.
Yes. As you are doing the other jobs.
Right.
Then you have the, what is this other one? The liabilities. Liabilities, those are your obligations. Okay? For example, you have to pay for using somebody's grocery, for example, rent. That is the liability of it. Okay. So expenses are also different. These are expenses like I mentioned to say you may want to go to the toilet as you are sitting there. You may need to drink some Coca-Cola, to quench your thirst as you are standing or sitting at the marketplace there. Those are your expenses. You also spend money maybe to, if it's a shop, you need to spend money to pay for water bills. Such are the expenditure patterns. Okay?
And that is
Purchases,
the use of money.
yes. So purchases, we are looking at things that you are buying. For example, if you are in the business of buying and selling, so when we say purchases, this is the money that you use to purchase the goods that you want to sell in your enterprise. Okay? So those are the purchases. So simply there, you are looking at your budget in terms of how much I will come and sell in this particular business. How much of this money that I have will be for expenditure, say, just to spend maybe in order for us to be comfortable to do this business well. How much of this money is going to be spent on accessories, you know, if it's a big business, you are talking of vehicles, or is it the shop itself that you are going to buy? That one is an asset, okay? Because you buy that in order to facilitate your business. You are not going to sell it. It's an asset. Then you have the liabilities now, which we mentioned, that these are things like you are paying for water, paying for electricity, etc. Those are your liabilities. Okay. So budgets are normally prepared on a monthly basis. In a business situation, even in families, actually, in homes, you get your money at the month end as a salary. You need to budget monthly to say, okay, this money that is coming in as a salary, I will need to spend it this way. You are going to look at your food stuff. You are going to look at water. Going to look at school children. Mention it. Health, expenditure. So you do it monthly. Then this monthly will then be multiplied by 12 to do a budget for 1 year. Culminate now into a year's budget. Okay? I hope we are following each other. The budget is also based on what the entrepreneur believes can be realistically achieved.
That aspect is very important in some cases because some of us as entrepreneurs may think that when we do a budget, we should just fit in figures anyhow. Okay? Now, you and me as a business person should be convinced that what we are putting into our budget is something that is going to work. Prices, all the things that you are going to obtain to use in your business. Okay? You should also realistically set prices for the goods that you are going to sell or the services that you are going to sell.
Yes.
Because if you just put any figures in it, then you are not being realistic, and at the end of the day, you will not be able to achieve what is intended. Okay, now, having said what we said, let us now put our stress on the importance of budgeting. Why is it important for us to have a budget in our business transactions?
Thank you so much. Um, we've said that budgeting is actually a financial plan. Okay? So budgeting is important because it outlines how you are going to use business money in order to create more money. So that's the importance, the major part of uh, budgeting is how you are going to use the money that you have in order for it to make more money. That's the important thing. So budgeting is a tool actually to the entrepreneur that can be used for planning and checking progress. Okay?
Dear listeners, if you may recall, when we were discussing planning
Yeah.
in detail, we mentioned that planning is not something that you do once and that's it. Okay?
It's a
It
continuous
is
process.
something which is a continuous process. We use the word dynamic, maybe for the sake of giving you an interesting word. Okay? Dynamic meaning it goes on and on and on. So when you do your budget, in other words, you have set your parameters on how much money you intend to get into your business or to earn in your business, how much money you are going to spend. In other words, take out of your business as you do your transactions. Okay, you may find that once in a while, what you believed will happen doesn't actually happen because of certain situations. Maybe you intended to raise 200 kwacha, but because the depot that you were using to transport your tomatoes broke down, okay, then you cannot realistically get the money that you intended to get because of this uh, uh, problem that you faced. Okay, right. So it means you have to get back to your plan, and in this case, your budget. Have a look at it
Yes.
and you see where you can do adjustments. So the budget needs to be revisited just like you do the general plan. Okay, you revisit it from time to time to see whether the current situation actually is in keeping what you originally intended to do or not. Please, you may continue.
Thank you so much. Budgeting also provides a systematic way to spell out future activities in financial terms. So budgeting will actually systematically show you where you want to go. You know, the activities that you want to take in future. You see? So a budget is prepared for the future. Okay? You are saying when I get my money, this is how I'm going to use this money in order for it to give me more money.
Mr. Muteshi, that is a very interesting point. I'll give you a vivid example. I don't want to mention any names so that I do not embarrass the person who was involved.
Yeah.
But this is something that I observed because of lack or absence of budgeting.
Yeah.
Now, once a certain lady asked the husband to give her some money so that she would start a business of selling flitters. Okay? Now, everything was arranged. The flitters were being sold. Surprisingly, at the end of the month, she went back to the husband to ask for more money so that she would continue with the business. So, what must have happened to the money that was being made from selling of those flitters? So, that indicates that in the plan, the budgeting did not include putting back into the business the monies that were being realized and everything was being consumed. And therefore, money had to come from a different source to continue the business. But the idea of running a business is so that the initial capital that you put in should keep growing. So the business becomes bigger and bigger.
Thank you. That was interesting indeed. Uh, so budgeting, if performance varies from the budget, it provides an early warning of problems, and the entrepreneur can think of what to do to overcome them. So here, what we are saying is the budget is actually your, what do we call it? Say it's like a red flag. When there is, it's go. Then when your business, or maybe you are going off budget, then it will show you a red card. Say, there is a problem. Please come back, sit down, and look at the budget again. You see, so it's an early warning. This budget, it will give you an early warning when things are not going well. So simply, if you have written your budget and your budget says for uh, paying out workers, you will spend 30 kwacha. Then you will find that at the time when you want to pay for your worker, you require now, instead of 30 kwacha, you are going to require 50 kwacha. That is an indication that something must have happened. Why are you expected to pay 50 kwacha instead of the 30 kwacha? Something must have happened. So you sit down as an entrepreneur and say, where did I go wrong? Why am I incurring more expenses than I planned? So this budget is going to raise a flag to say, please check your budget properly. Maybe it could be that you underestimated the cost of labor. So if you underestimated the cost of labor, go back to your drawing board so that you rectify that. Maybe there are changes in the economic environment. For example, you budgeted to buy loaves of bread, maybe they were costing by then 10 kwacha. But when you go there today, they are telling you it's 18 kwacha. There is that variation, meaning it will affect your budget. So you should be able to revisit again, as the chair said, that this thing is dynamic. It constantly calls you back to the drawing table so that you check and see whether the activities that you said you were going to carry out are realistically being followed.
Great. Yes. Like we said, when you budget, this is one way in which you will systematically do your business transactions. Okay. In this way, you will not spend your business money carelessly or impulsively. Now, impulsively, impulsive spending means you buy something which you did not think of in the first place. Now, perhaps you agree with me. Many times when people get into, for instance, supermarkets, okay, maybe they intend to buy only a packet of sugar. But because the supermarket is so well displayed and there are many attractive things, they come out with three or four other items which they have not intended to buy. Now, if you're going to do this kind of thing in business, then it means your money is going away like through a sea. And in no time, you will find that you are having problems. Remember, you were reminded that money in your business is like blood in your body. If your blood begins to reduce in quantity, you become frail, you become sickly. And if the trend continues, then it becomes fatal. Your life may end. And you are reminded that in a similar way, when you have worked out how much money you will need to do your day-to-day business, in other words, your working capital should be so much, and this begins to reduce. If you don't control it and put it back, like the doctors do through blood transfusion, in other words, you should, as a business person, put in
Now
more
back.
money.
Yeah.
That is blood. That is contribution. If you don't do that, then the business will begin to get into trouble until one day it collapses and you have no business to depend on.
Sure.
Right. Now, having talked about budgeting, which is an important activity in doing your business transactions, mind you, this budgeting is part of your business plan.
Yes.
Then you should also ensure that there are records of every business transaction that you do. Okay. Now, let us try and get into detail again as simply as we can. Please remember, dear listeners, that later during the program we shall be opening our phone lines, and as usual, you may be able to reach us with a comment, with an addition to what we have said, or with a question. Your questions will be very important. Your comments are going to be very important because they will not only enlighten yourself and us here in the studio, but also those others who will be listening and will not ask any questions. Now, let us deal with record keeping as another aspect of managing your money effectively. Now, we are going to deal with this maybe in a traditional way. What do I mean traditional? The usual way that we have been discussing record keeping. But we should also bear in mind now there are technologies such as so many systems are now changing. But we will first of all deal with the traditional way we have been keeping records, but we shall also, as we go on, mention the developments in technology which you may be able to adopt and improve on your record keeping.
Indeed. Record keeping. Yes. We know that things have changed, and now we are using computers, but the concept actually is the same. Okay? Even in your computer, for example, a cash book on paper and a cash book on the computer, they are the same. Right? It's only that the other one is not on paper, but it is what do they call it? It's technologically, in soft copy. So you can take it.
Yeah. Record keeping is one in many aspects of your business. Even in day-to-day life, you need to keep records of what you have. Let me not offend some people. I want to give a very concrete example of a teacher. Because once I was a teacher. There was a teacher in one school who had a class who could not even know how many pupils that teacher had in the class. The inspectors of school then came and asked her, how many pupils have you in your class? She had said. She couldn't know how many. So, how many boys have you?
How many girls?
How many girls? Just because she did not keep record, eh? The register of her pupils. She could not know how many girls and the boys are in her class. So it is important that we keep record. Record keeping is the process of writing down how money is earned and spent. How Have you earned this money? It should be moved on record. Eh? How you spend the money should be recorded. So record keeping is important in your business. Eh? It is important and concerned with collecting and recording financial information for the purpose of keeping reliable financial record. You must keep reliable financial record. How money comes into business and how you spend it should be correctly written and recorded.
It is very important to reduce Mr. Kaputa, because not only yourself will require to follow what your business is going through, but also other interested parties may be helped through your record keeping. For example, manufacturer or a wholesaler to give you certain items on credit, yeah, so that you will pay that person or that business after you have sold those items. Now, how are they going to be convinced that their goods are not just going to be lost? Okay? But if you show them the records of how your transactions are going, they will be convinced that you are a viable enterprise and therefore worth of trust. Therefore, the importance of record keeping. Now, we also talked about one of our objectives being formalization of your business. That means you will have to make a contribution to government coffers by way of paying your taxes. Now, how does ZRA get convinced that the tax you are paying is what you should be paying? It is only through providing record.
When they read it through
That's right.
and get convinced
Okay.
that this is how you are running your business and this is the money you are realizing.
And by the way, uh, fellow business people, just to digress a bit because it's very important. When we talk about paying tax to ZRA or to government through ZRA, this is not something that should be of concern to us.
No.
If anything, we should very proudly and willingly, with big smiles, be able to pay our taxes.
Yeah. We are money.
Yes. Why? This is because it is through taxes that we pay as business people that the government is going to provide all the services that we need. You see, our businesses cannot run if there is no order in our society, in our communities. But that order is brought about through the government. And the government needs money to be able to operate properly. Okay? Now, many of us do complain. You go to the hospital, for instance, or clinic, and they give you a prescription to buy your medicines, and you shout at the top of your voice. Okay? Because you expect the government to have bought medicines and stocked in that medical institution. Okay? But you forget that you are in business and you have not made any contribution whatsoever. But you are expecting the government to do everything for you. Eh? Now, it is like you going to a conference, say a church conference. You are required to make a contribution so that food can be bought to be eaten at the conference. But you just turn up, you haven't paid anything, then lunch hour comes and you are expecting to have the best part of the meal.
You haven't made any
You haven't made any contribution. Okay, so in this way, we should, as business people, feel proud to make a contribution by way of paying our taxes. Okay, so please
Thank you very
Continue
much.
now.
Thank you very much.
That digression was
Record
important.
keeping also includes stores record. It includes stores record. Record of items which you keep for use in your record of items you keep. All those items should be written correctly so that you know how many items you have. If you do not keep record, those items may go missing without you knowing. Eh? And when the item is missed, it means money is gone. It is money not well spent. And the money not well spent will make your business go down. Because instead of buying that item once, you'll be buying even 5 times because you have not kept the record of your item. Any person can come and get your items away and you will not know because you have no record. Eh? So you see, record keeping is important in the business. It also includes keeping records of important things like materials or use in a building process. You are awarded a contract to build a house. You must have records of the items that you use. The tools that you use should be properly written, recorded, so that you keep it out of those items. The materials for use in manufacturing, for instance, if you manufacture soap, the materials should be properly recorded. The materials that you use for manufacturing cooking oil should be properly recorded so that you don't miss out. Here tools, like hose when you are a farmer, you must keep it stock. You must keep records of how many holes you have. Because if you don't keep it stock, you don't record these things. People who come to work for you will take your hose away and you will not know.
So maybe you lend out an item and then
And
you
you have
forgot
not recorded.
to whom you gave it. So if it doesn't come back, you have to.
This happens in our home. Eh? We lend out things. People come to get our holes, our tools, and so on. We don't record. And they take them away. They will not bring them back. And so you lose out. You keep buying the same item time and again.
So if you are keeping chickens, for instance,
Yes. The
you
key.
need chicken feed and other materials.
Mm.
And if you don't keep stock of these items, then you do not know how much you are using. And you find that your rearing of chicken becomes a very expensive exercise and you don't make money
You continue buying big mass from time to time because you don't keep records. And people will just come and take materials away. You do not know. So record keeping is important in our business. So our business is to run properly. We must keep stock of every item that we use. That is used, every item that is used to generate money.
Okay. Having said that we should keep records, there are a number of documents that we need to know about, which we especially train the person to use these by one. You may
And I start, yes. Um, One of the most important documents that we use in business is the receipt book. This is the receipt book, the book of receipts. So, this is a document that you give a receipt to the person or a business that pays money to you into your account or into your business for the goods or services that you have supplied. For instance, if I own or those who own groceries, somebody who comes into there and buys maybe some packets of sugar, you are supposed to give them a receipt to show that they came to your shop and bought sugar from you, which costed this much per unit, and you received a total amount of that much. Okay? And that receipt should also be signed by you who has received the money. So if you look at the receipt, it has the following details. There is the name of your business. Name of your business should be on top there, showing if it's Kujave, Kuta, whatever, the name of your business, it should show there. Or is it Jaroni? It should show there. Then there is a date of receipt. The date when you receive that money, when that transaction actually took place, there is a date there which you are going to set right down there. Then the name of a person or organization that is paying you the money. Who is paying this money? Then the amount of the money which you have received, the receipt, and for what purpose. If it's for the purchase of sugar, you can that. Yesterday, somebody asked a question, saying, now, even for rentals, should I give a receipt? The answer is actually yes, you have to give a receipt, because that receipt will show that your tenant actually paid you for the month that she stayed, or for the next month that she's going to stay in your house if you ask them to pay in advance. Okay? So you need to write on that receipt. Say, yes, this man is going to stay in my house for the next 2 months and he has paid this much. Give them a copy. You also remain with a copy for your records. Then that same receipt. Nowadays, if it's rentals, you have the withholding tax. It's going to be calculated from those receipts. The percentage which goes to ZRI will be calculated on the amount of money that you receive. The other thing is receipts. Yes, you as an entrepreneur, you will issue a receipt when somebody comes to buy from you. You also will receive a receipt when you buy goods from other people. For example, you buy goods from a supplier, you get receipt. Then when you sell those goods, you will also give receipt. So it's two ways. That is the first document. Uh, we will use for phoning at an appropriate time. I think that we will give this time now is 9:32, maybe at 9:45. That's when we will open the lines. But for the meantime, we can continue with the documents.
Right. Let us also add that the receipts which you give out provide part of the information on how money in the business was received, while receipts that you get when you buy goods and services from others will give you information on how much money was paid out of the business. Now, perhaps the question should be, Why are we saying it gives you part of the information, not all the information? Anyone
It gives
want to take
you,
that up?
okay, it gives you part of the information because there is other information that is not on the receipt. The receipt is actually looking at goods that you are buying or the money that you are paying out and why. Then it also gives you data on the money that is coming in and why. Okay? But it will not tell you about the stock which is in the shop. So that information. It will not also tell you about the assets that you have in the business. So this is part of the information that you will get which will be on the receipt. But there is still other information that will not be captured by this.
Yes, of course, that's very important. In addition, the receipt is not going to tell you about any monies that came into your account, say through electronic means. Now, for instance, you may have done a certain job for a big company that will not pay you a check or hard cash to be passed on by hand to you. Instead, they will send it direct to your bank account. Okay, so that is not going to be captured in the receipt which you issue. So this is why we say the receipt that you issue, the receipt that you receive gives you part of the information because there are other pieces of information contained in other ways of recording. So this go on. What is the next thing that we are dealing with?
The next item, we are looking at the deposit slip or pay in slip. This document is actually found at the bank. When you enter the bank and you want to deposit some money, you will find this document there. You pick that document and fill in the gaps. It is actually filled in duplicate, maybe the upper part, maybe the carbon part, which remains with the bank, and in fact the first part remains with the bank, and the carbon part is the one that will be given to you after they have received the money. So what you are going to write on the deposit slip is your name, your account in which the money is going, how much the money is that you are going to deposit, in weight and figures. Then you will have to sign. Then you take that deposit slip with the money to the teller. The teller will receive that document, go through the money, and when he sees that the money is satisfied that it's correct as per what you have written on the deposit slip, you will stamp that slip and sign to indicate that he has received the money. Then he will give you back your carbon copy and he will retain the first copy. So that is the deposit slip.
Listeners, please also take note of the fact that, as we said earlier, many of the banks are now computerized.
Yes.
Okay, so for instance, I don't even need to fill in the deposit slip. I just take the money and I tell them my account number, and then the computer produces the receipt for me. Okay, that you should have a receipt from the bank. Now, where you are using a deposit slip, you fill it in duplicate. In other words, there are two. Okay, even if there's no carbon paper, it means You are going to fill two slips, okay? And you are given one back. For what purpose? You need it? Yes, of course you do. Because after the passage of time, you may not remember how much money you deposited. So if you want to check what your bank balance is on, you will refer to this documentation of receipts that you got, okay? And if you withdrew some money, you also kept the record, so you would be able to know how much money went out, and then you can, of course, be able to calculate if there are any bank charges, so you know about how much money in your account. But the exact amount of money remaining in your account is better received from the bank itself. But you have a rough picture if you keep your records thorough.
Because you compare with what is at the bank.
And you make sure actually after your receiving, you do what we call the bank reconciliation. What you do is all these pieces of paper that you have received, receipts, deposits, you actually put them in a file. Then when you go to your bank, get a bank statement, you show the activity of what happened in your account, deposits and whatever. Then you are doing a reconciliation to see whether yes, all the
Okay, so what is our next document?
our document. The next one is a checkbook. At the time is 9:40, so we are looking at the checkbook. Yeah, a checkbook is issued to your business by the bank. It's not all accounts at the bank use checkbooks. Certain accounts which is facility of the check. So the bank will ask you to give a sample of your signature. And nowadays, actually, they will even have your portrait in their computer there. Under it, you have your signature there. When you issue out a check, you have signed there, you have indicated how much you want to pay to someone using a check. They will punch in the details in the computer, and then your face will appear on the computer. You are seen. Your signature also will appear. So this is how it sounds. And it shows even the amount of money that you have in your account. Your NRC, everything is there on that sheet. So that they will look at that and compare. Does he really have money this month? Yes. Is he the real person? Yes. The signature, is it the same? Yes. If it passes, you will see him actually ticking on your check with the red pen. One. Then after that, you sign. Yes, said these two have agreement. They have spoken to each other. So this man has money. Then you will start calculating now how much you are going to remain there and how much is going to be out. So a checkbook is actually a document which is a folder of that certain account which allows checks for you to pay. You will not use hard cash to pay your beggars. You will not use hard cash to pay maybe suppliers, but instead you use that. What are the advantages? Advantages of using this piece of paper is that you are not going to be seen moving around with hard cash, which can be stolen. Nowadays, boys are very good at stealing from you. So they will not be able to steal from you. So even if he stole a leaf from your check, that one and there is no, you haven't signed there, so it will not be entertainment. So it will just be any piece of thing. So it's safe, it protects your money. Okay? Yeah. So that is the checkbook. And this is
Yes, you have already made mention of what the bank requires of you, so that you keep records in the bank, and the documents that you require are, for instance, your SIM, a copy of your passport size photograph with your gift, and so on, and also the sample signature. If you sign a loan, of course, it will check your signature. This is where you have other signatures as well, and they also will be required to provide sample signature of the resident. Okay. Now, you need to remember, so when you have a checkbook, it is so designed that you keep your record. So when you issue a check, there is a counterfoil that remains, which you should also fill similar details in, so that that remains for your future records. You know how much money you brought out for a check, and easy then for you to keep track of what your business transactions are. Okay, having said about that document, then let us now pass on to the next document, which is invoice.
they take the programs before that. We open the lines now. Okay. The time now is 9:45, and the number that we are going to use is the following: 0977 590 183. 0977 590183. Let me call that one again. It's 0977 590183. What you do is you give us a missed call. Means you just call, don't spend your money, it's just a missed call. Then we are going to call you back, and you expect you to make comments on this particular topic that we are actually tackling today. You can ask questions, you can even make contributions for on this topic. So the number again is 0977 590183. Please, the lines now are open, so you are free to go.
Okay, so it's already called.
Okay, and we are still struggling. The next topic, the next document that we are going to look up is the invoice book. So we are trying to get hold of the caller so that we hear his question. Good morning. Good morning. How are you? You are Mr. Hello, come again. Hello. Caller.
Okay, you can call again. You may call again, please.
We can go on now to the invoice. We are saying an invoice is a request for payment. An invoice is a request for payment. when you have supplied goods or services for which you have not paid for, you have not been paid yet, you write what we call an invoice asking for payment. Okay? Hello? Yes, your name, sir? Laston Maveng. Yes, sir. Oh, is it so? Sorry. Uh-huh. To catch it. Okay. Uh-huh. She will. Hello. Hello. Uh, you can visit our office there. The office assistant will be able to assist you if you want a copy of the notes that we are, a handout. We can be able to give you that handout. Uh-huh. But yeah, we know that maybe we haven't been speaking, so loudly, but we will try. We will improve.
We are grateful
Okay?
for
We
the
are very
feedback.
grateful actually for that feedback.
We'll try and make the main
Hello,
improve.
Mr. Maving, are you still with us? Okay. So, do you have any other question? Okay. Thank you so much. Okay. The lines are on, so please you can call. That was Mr. Mavenga, who was trying to find out on the invoice. So we are saying we are going to give them the what? The handout. So now we are looking at the invoice book. We are saying an invoice is actually a request for payment. After you have done some work. Hello? Mr. Njovu. Yes, Mr. Njovu, can you please go ahead? Thank you so much. Okay. Indeed. Yes. Yeah. Thank you. So you can take the chair. The first one, I will take the chair.
The first one was
The first one was that there are certain infrastructures which are government assets. He gave an example of the dam. We are saying the government is encouraging us to go into amalgamation or rehabilitation. But now, how can they go around this so that they use these government assets in order to produce
fish? This is a very, very important question. Uh, what is required is the working out of a business plan, okay, with the Mitukutuku Dam as center of focus. Okay. So, all the proposals that you need to make into a business plan, once a business plan has been done, then you will need to liaise with the relevant government departments or ministries. For instance, the fisheries department will be able to tell you, okay, or those that deal with water will be able to tell you, okay, what role government plays in as far as the Tukutuku Dam is, and they will advise on how best the government will be able to meet your plan on rearing fish in that dam. Okay? Now, once you have a good or bankable business plan, and the government sees that this is going to actually an advantage not only you but the communities as well, you will create employment and so on. I do not think that they will stand in your way. If anything, they will give you even more pieces of advice so that you can enrich your plan. And I think they'll be quite willing to assist you. Now that we have the constituency development fund that has been expanded, you may probably be able to draw a soft loan from that avenue so that you will be able to conduct your business taking into account this down that you have mentioned.
Indeed.
So consultations with the relevant departments or ministries of government will be very important. And this is why, as part of our training in this business development program, uh, we dealt with business planning. And today we are continuing with business planning, but centering on how well you should utilize your money. Like if they allowed you to do business using the Tukutuku Dam, how are you going to account for all your money and ensure that you will have a going concern? And if you are going to be given a loan, that loan will be able to be paid. Okay. I hope that the answer that we have given will help you. If there's any gap in that answer, please feel free to call back.
Thank you, Mr. Jovo. As the issue of chickens, yes, we heard that announcement. Indeed, there is actually a bright future for those who will be rearing chickens. You know, from time immemorial, actually, we have had problems of how to market our chickens. You can grow chickens, but where are you going to sell them? So it took us a long time, and it was cumbersome for us to actually sell these chickens. And as a result, a good number of our colleagues, poultry farmers, decided to stop rearing chickens. But now with this new development, let us please continue producing these chickens. As for an abattoir,
from Mr. Shindikinya, he says following, thank you for a good lesson. That's the contribution in the market people. They live too much. What do they believe in? What do
okay,
they believe in? Mr. Alex King, following, thank you for a good lesson. Just as a contribution in the market people. believe too much in Kambuma, but you're not taking record on how
That comment.
That Mr. Shinzi
Okay, that
right
is
to the point.
belief in witchcraft.
Yes.
All right. Now, I think we should make it abundantly clear that, in as much as we respect people's beliefs in business, witchcraft is not going to help. What will help you is how well you will manage the business. Now, nobody can tell me that businesses such as the mine, for instance, are doing well because those people who have come to run those businesses in the mines have better witchcraft than we do.
it's not right.
I think they simply invested adequately and they have all the systems in play which are helping them do the business very well. So this is why we have this type of training so that you have got the knowledge and the skills to be able to run your business to the best of your ability. And no amount of witchcraft is going to help whatsoever. So thank you very much, Mr. Engineer, for making mention of that. Okay, while we were answering the questions, I think we were dealing with the aspect of an invoice.
Yes.
And we were in the process of outlining what it is and what is contained on the invoice book. Okay, so it is like a receipt book, and we have, first of all, the name of the business on that document, then name of the person organized or organization which is being invoiced is written on, the date when we issue that invoice, and the amount which is owed to our business, which we are asking for, then the goods or services which we supply to that person or organization, then the signature of the person who has written. In some cases, when we take the invoice to the person or to the organization, the person who receives that invoice sign, countersign to show that they have received the invoice. But here again, there is a lot of technology going wrong. Yes. So sometimes you don't always use hard copies, and the computer is at play in quite a number of cases. But as we start small, we may not be able to rely on computers, and so this physical way of dealing with asking for our money is very, very important to us. Okay. Then, as we wait for other callers to come in, we can go ahead and discuss the quotation book.
The quotation book is also known as a pro forma invoice. This book is used to give prices for goods or services so that the prospective customer can decide whether to buy from that business or not. So, a pro forma invoice or a quotation book outlines the prices of goods, shop, or services. It will just say, okay, sugar is 10 kwacha. No, cutting your hair is that's from 5 kwacha. Just
The
like
other way
that.
to advertise it.
You did. But now somebody will come to you to ask for this quotation because they want to buy. Usually they will go to 2 or 3, companies that are doing that item, so that they have 3 quotations, which they will compare now to see which one they can buy from. So these are just price lists of goods from one shop to another, the other. Then whoever, a prospective buyer, will actually look at this thing and choose where to buy from. That is what quotation is.
Very good. Now, businesses also use payment arrangements. So, what is payment?
Important. Now we are looking at the business, the bigger business, right?
Growing.
This is used to show authority. The document is particularly relevant when your business grows and has employed several people. It is a means of controlling cash outflow. Okay? So, here is a business which has got many people. So, now, in order for you to control the monies that are going out, you need payment funds, which will be approved by an approval. If we got goods from a shop as a company without paying, okay? One, these goods, when they were delivered to us at our shop, we will give them what we call a goods receipt note to show that the goods that they have given us, they are saying they have delivered to us, we have received and costing this much. That document will put it aside. Now, them, when they go back there, those who deliver those goods, they will come now with the they are costing this much and we want our money. Then they will bring their invoice to you. You will check that invoice against your goods received to agree that yes, surely these are the goods that we received and they are costing this much and this is what we owe you. Then that those who have received the invoice, they will now write what is called the payment match. They'll say, yes, we got this one attached to the payment match. Then this payment match now goes to who? The authorizing officer, who is going to say, yes, I've looked at the document and surely in our budget we have this activity. Yes, this will receive the goods we can pay. Then he will sign, authorize payment, signing the payment voucher. And after that payment voucher has been authorized, that's when it goes for payment and you attach check. So that is the simply the process of using the voucher.
So, in this way, you control outflow of money because when you run out of money, there will be no cash. There won't be any working capital. And your business will have to grow. So you must control by systematically, deciding, which invoice to pay, which invoice to pay, and so on, so that there is always money available for operations of your business. Right. Now, when we are small businesses, we may not have the sophisticated aspects of, computerized information where the pay slips come out and things like that. And we have a few workers. So, how do we keep track of whether we have paid their wages or not? Because if you don't keep a record of the payments that you make to your workers, one day you may get into trouble. Because a worker will come and say, for such and such a month, I did not receive my wages or my salary. Now, How do you convince that worker that you actually paid them? Unless there is somewhere you wrote everything and the worker signed for the receipt of their wages or their salary. So we have what we call the wages book, which is an important document for any small business to be and keep track of payments being made to their employees. So can you say a little more about
Is actually a book in which you document whatever wages that you have paid to your workers. You write the name of the worker, the day, and the month, then the amount that you have paid them, wage, then they sign for it. So you find the wages usually we make it, we divide it into 2 months. We paid maybe for January, paid for February, they paid for, and so on up to December. Then under January, you have your worker. You write it down, their name, and the analysis. Then you have how much they paid, then where they're supposed to sign. So that whoever gets his money signed for it all up there. So that after you've paid them all, you can even calculate. Now you add up and see how much money you have paid for wages. That in itself is data that you are going to use as record. That is the wages.
thank you very much. Jesse, a very simple, easy explanation of the way to book the document that is quite important to us because if you ignore keeping records of the wages or salaries that were paid to your employees, then one day you may get into problems. Because if it is a dispute on wages, having been paid or not being paid by the worker, and the worker goes to labor office, okay? The labor officer will ask for records.
Yes.
And if you, as an employer, do not have such records, then believe you me, government will be on the side of the employee because the employee is the weaker party. So you should not eat
Onto their head.
on the head of the employee. All right. So you may end up wasting your money because if you truly paid that employee, then it means you are going to pay the second time. And as we've been talking to you about, how you should effectively look after your business money of the business is not there for you to spend everything. Please realize that you are in business because you want to make you want to make a profit and not a loss. So careful transactions is a necessary activity.
Indeed. The time now is about what? This is 10:12. We started late, sir. Sure. So we still have about 10, 15 minutes to go. So those who still, the lines are still open. You can still call us on 0977 590183. 0977 590183.
While we await callers to come in, let us deal with, I think, the last item,
Very
which is
important.
very, very important because this deals with the actual recording of monies coming into the business and getting out of the business. Now, many of us, especially small scale business people, do ignore beginners. By that I mean we do not grow. If we are selling at the market and we start with selling one box of tomatoes, we have worked for the last 10 years and still selling one box of tomatoes. Why? This is because the maintenance of our transactions by way of recording them is being ignored, and therefore we do not see what is wrong with our business. Okay? So let us discuss this very important document called the cash book. Okay, we can quickly start, and then I'll try and explain how the cash book may actually be drawn out.
Thank you very much. Thank you. Thank you. Cash. The cash book is a document in which you enter all the money received into and paid out the statement. The money that you receive and the money that you pay out should be properly entered in this cash. So, you can conclude now.
Okay. Now, having said that, let us mention that the receipts which you give for goods or services that you have supplied as a business or business organization can be used to enter the income side of the cash book. While at the same time, the receipts which you get when you buy goods and services from others will be used to enter the expenditure side of the cash book. Now, before I go on to demonstrate how you can draw out a cash book, let me say this. Many of us as business people do not give us to know if that is a great way to use. They do not, to the letter, write out all the money that comes into their business and all the money that goes out of the business. Let me give an example of a small scale business person sitting at a market in the business of selling vegetables. This person goes out on top of a truck to a certain garden where these vegetables are grown, and they buy those vegetables and bring them back for sale and say, Yawama market. Now, if the person spent 150 kwacha to buy those vegetables and then resells them and gets in total 300 kwacha, what do they say their profit is? All they do is subtract the cash they spent from the cash that they now have after selling. And they will say, I have made 150 kwacha profit. Okay? Then you will be surprised why they don't know. Now, surely, are you, fellow business person, telling us that when this person went to that garden, which may be 40 kilometers away, and he came back, then spent close to maybe 12 hours before all the sales can be completed, they did not spend anything else? Okay? They must have spent on transport. Okay? When they came back to the market to attend to the call of nature, they probably went to a fee-paying toilet. Okay? They probably got hungry and got some fritters to eat. or bought a soft drink to take. Okay? Maybe somebody helped them to lift, you know, that is, yeah, okay, the container of those vegetables, and asked to be paid 20 kwacha and so on. Now, those are the cost of sales. They should be deducted from the amount that you have made. So, in the true sense, you have not made 100% profit of 150 kwacha because you spent prior to bringing the goods back and also during the course of your doing the business. Okay? So, do not ignore entry of any transaction into the cash flow because when you enter everything, then you will have a realistic picture of how your business is performing. Now, the cash flow may not be a very complicated uh, book. All you need to do is buy yourself an exercise book. We recommend a hard-covered book. Why? It is because a book with a hardcover will last longer than one with a light or flimsy cover. Then you draw, say, 5 columns, one for date, the other one for details, the next one for income, and the last one for expenditure. So, dates, details, income, and expenditure. Okay? This may be drawn on one page, but you may also wish to indicate income on one page and expenditure on the other. But we recommend that if you do that, then please have pages which are facing each other so that it is easy for you to repair. Okay? You are looking at income and you are looking at expenditure. You don't have to turn the pages. Then at the bottom, you have total. That's total for income, total for expenditure, so that when you can subtract expenditure from income, you know what your balance is. If your balance is negative, minus, in other words, you have spent more than you receive, then you know you are getting trouble. But if what remains is a positive, a plus, then it means you are doing well. But of course, it also depends on what the figures really are. Okay, is the amount remaining good enough for you to be able to carry out with your business? So, on each day that you are doing your business transactions, when you sell something, write the date and write down under details what it is that you have sold, at how much you put that in income. Okay? If you buy anything for the business or in the course of doing the business, you write down the dates and you write what it is that you bought and you write the figures of the amount you spent under expenditure. So the money that you receive from sales, you write under income. The money that you spend when you buy things, you write or record under expenditure. Okay? So if you are doing this day by day for a period of say 1 month, then at the end of the month, on the last day of the month, when you have finished your business transactions on that day, you find the total of income, find the total balance is. In this way, you will be able to keep track of whether you are doing well in your business or you are not doing well. And like we said at the beginning, or earlier on, if you see that you are not doing well, then you must think of ways in which you will improve your transaction so that the business does well. If you are doing too well, let's say your budget said this is what I will earn, but you have earned much more than what was projected, then you must find out what has led to this occurrence and maybe adjust your budget accordingly so that, like in a business plan, you will be as realistic as possible within the prevailing circumstances. And if you are spending more than you had intended to, then you must find out why it is that you spend more. Did the prices increase? Was it beyond your needs and therefore you had to do it? Or were you simply careless? You began to spend certain things which you did not account for in your budget. And if that is the case, then you know you were not disciplined. And you must ensure that you get back to what you said for yourself. Because you said, this year I'm going to buy 5 holes and 2 axles. But you bought 15 holes. What led to that? Okay? You must justify it and adjust your budget accordingly. Okay? If you have anything to add, please go ahead.
I think it has been explained in details. That one has been explained in details, the cash book. Now maybe we look at now the uses of all these business records because our time now is 10:25. So we have 5 minutes more before we close. So uses of business records. Now all these business records, there are some others which we have not made mention here. Okay? But these are the basic ones. These are the basic ones, the ones that we have mentioned. Yes, we are now in the computer age, electronic age. You will find that even when, for example, where you were supposed to use a check, and now they just send the money electronically into your account, still more, you will receive a notification that such monies have gone into your account. And that in itself is a receipt. Okay? So it is important to understand that. Now let's look at the uses of these business records. Business records are very useful to your enterprise because they can do the following. They can help measure your business performance. Say, actually, you can use these records to determine whether the performance of your business is good or bad. These business records also will help to track money that the business is owed or to track monies that the business owes other people. Okay? So these records also will act as evidence to lenders when they need to borrow. Okay? When you need to borrow. So these records, because the lenders will ask for these records to see whether you have been running your business well. So they will ask for these records. For example, when you are doing your business plan, there is that component of the financial, the cash outflow. That one, they will need it to look at it and see whether this business is viable. Then These business records also will be used to obtain credit from suppliers. The suppliers who give you goods without you paying immediately. But this one is centered on how you keep your records. If they see that your business records are not kept well, then they may not trust you. So business records also may be used as a basis for future plans. This is how we performed last year. Now we want to increase on this performance. So you will be referring to the activity that took place maybe earlier in order to plan future activities. Okay, so this same business record will be used to calculate tax and other legal requirements. Very important. ZRA will look at these records in order to come up with how much you are supposed to pay as tax. Okay? So the NABSAs, all those. Okay, we were supposed to give you a practical exercise, but we are not able to do that on air. Okay? On air, we are not able to do that. So maybe we could just ask you to try and draw a cash flow and try to enter records on your cash flow. Then you will see how easy that may be. Where you may still call us, I think you have our number. You'll be able to assist you. Or come to our office, we'll give you
a hard copy of what the cash flow page looks like.
Sure. I think now we can hand over to the chair to close.
Thank you very much, AC. Thank you, Adam, for presenter. Thank you to our technician who has made it possible for this discussion to also go on Facebook and perhaps later on YouTube. Thank you very much. At this point in time, listeners, allow me to end by thanking you for listening in and supporting this program. I also wish to thank the management of Beats FM 88.1 for giving us the slot for us to be able to conduct this training program on air. And more importantly, I wish to thank